curious as we start exploring, and you're an engineer, you get curious, you start tweaking what you want to do, and you come to whatever you're managing. I went down a similar path to you, but I didn't stop there. I was too curious about the low correlation of asset allocation of futures contracts. Like, I just went a little further and added more diversification and created more things. What about the other more traditional long short trend following? It was not attractive to you when contrasting where you decided to make your career?
There are two reasons why I didn't in stocks. One is that I had experience in stocks. I had developed some insights as to what does it mean when a stock gets into a new regime, as I said before. So that was kind of unique. I hadn't never seen anybody doing that. Trend following in futures, I didn't really have a lot to add. Really, it's like I had something to add here, and I thought it was unique. I was less players involved. I thought, to be a bit cliche, there was more edge. Even though I don't really believe in kind of that thing, but basically it's like there's less people doing that, and I also think that the trends in stocks are more powerful than anything else. Now we can have stocks really doubling in a month, whereas it's hard to find that in futures.
So this is one of the things we talked earlier about how when you were a value manager during 2005, 6, 7. You realize you were in a bull market, and that's why you did well, right? So the autocorrelation is strong. There's trends, positive trends everywhere. What happens in a market like 2000 to 2003? What happens in a Japan-like scenario where that idea that equities trend may go away for more than a little bit?
That's a good question.
Indices do trend. Single stocks do trend, but single stocks, we have a lot of them. And there is always some stock that is trending up because there is always some entrepreneur that is doing things differently. There is always somebody that is eating or getting market share. There's always something new that is happening. There is always some winner in somewhere.
Schumpeter's creative destruction.
Creative destruction.
That is true, but okay, go ahead.
Let me finish. Yeah. So now in a bull market, we will have a lot of these stocks, and I will be very heavily invested, and that's good. In a bear market, when most things are going down, I will not be heavily invested, and that's even better. So what happens in a bear market? What happens in a 2000 to 2003 scenario? Most likely, I will be underinvested, and that's okay, because it's better to be underinvested than losing money. That's my philosophy, and that's why, going, Adam, to your point before, is that I'm not always fully invested because I have no interest in being in having less money than today than yesterday. If it means that there's no opportunities that I think are good, it's just better to not take them. It's from 2000 and 2003, if you were not invested, you did better.
Well, it's interesting, but there's a regime shift there too. 2000 to 2003, there were absolutely trends developing in oil and international real estate, and that was probably one of the.
Pretty good.
The problem is that regime shift portion.
It's the Japan scenario. It's 30 years of declining markets, right? Where that upward drift over time turns into a downward drift over time. Decades.
It has happened that the U.S. stock market has been in an uptrend, broadly speaking, for decades, but it doesn't have to be like that.
Right.
There's nothing tells us that trends have to go up. I think there's a belief out there that equities trend up over time. There is no reason why, actually. And in fact, I would say that most people that say that speak from a perspective of a US-centric market,
Definitely.
which is actually the exception. Like if you look at most other markets, they don't trend up. And there is no reason why the reason why it has trended up is because the US economy has been successful, because it's been the most successful capitalist system out there, where we have these creative destructions and earnings have grown up over time. But things can change. It could be a Japan kind of economy. It could be an European kind of economy, or it could be South American type of economy. And we may be going in that direction because there's a lot of monopoly power and wealth disparities and stuff, and that's not conducive to wealth creation. And anyway, I digress here. What I mean is that even in Japan, even in Europe, even in markets that have been sideways for 20 years, you will find stocks that are doing really well. Like you could see like LVMH in Europe, or even SoftBank at some periods. There's always some stocks that are doing well. And ultimately, for me, in any case, it's just better to not be invested than invested in something that is going down. I don't need to be invested. I'm not doing this to invest in equities. I am doing this to harvest returns using the stock market features as a tool to make money. And sometimes it will be a fertile environment and sometimes will not. But if everything's gone down, well, everything's gone down. I think I will not have a lot of returns, but I will not have, let's say, negative returns.
Yeah, I think that's clear.